All right, traders, within this video, I'm going to be doing an in-depth price action analysis on the SPY. This is going to be going over when to be long biased, when to buy the call options, when to be short biased, when to buy the put options. I'm also going to be sharing with you how to trade the best setups at the best prices. I have many plays prepared for you guys, and these are going to be phenomenal trading opportunities. I have 5 specific plays that are expected to be like plays that can make this a household name. I'm talking like legacy plays. I'm talking plays that come around that are in such rarity only a couple times a year at these key specific levels that have huge upside potential with very little downside potential. I'm going to walk you through the strategies. I'm going to walk you through the price action, guys. We're going to get straight into it. I'm telling you, you are not going to find plays like this anywhere else. We're going to deep dive into all of these. There's going to be day trading opportunities and swing trading opportunities, also more of like a midterm leap option trading opportunities. So much opportunity, so for those of you who can't day trade, there's going to be opportunity for you with the midterm swings and the leap options, right? If you're working a 9 to 5 or if you're a full-time student. So with that being said, let's get right into this price action analysis. So first things first, we are going to start off with the SPY. So in terms of my point of view on the SPY, I'm still short biased. From a macro view, I think we're going to be heading down to fill this gap below from at 455. That's where I see this heading. How long do I think it's going to take? I'm thinking 1 to 2 weeks, most likely 2 weeks. We have to see. Now, in order for this to go to $455, the main thing that just really needs to happen is you need to see this key support level that recently had very, very nice upside potential for the short term being where it ripped to new all-time highs very, very quickly from 467 right here all the way to 480. You need to see this turn into a resistance level. And as you could see, day one, when it touched, it cracked, it started reacting as a resistance level, and the wicks are towards key support right here, which is bearish. So notice how there's a gap to fill right here, and the top of this wick, this bearish candle right here, is towards that gap fill price, which is bearish. And notice how it's forming lower highs, and there's a gap to fill right here at 467, and the top of that wick is towards that key gap fill level. So SPY is forming lower highs. It is looking extremely bearish. For the short term, it could have a small bounce to 470 to 474, but from a macro point of view, I'm still short biased, and as long as this can maintain 467 as a resistance level, you're going to want to consider, if you're interested in playing the key breakdown, keep in mind, not the best price. It's a decent price. I'd much rather prefer resistance in terms of sizing big, but if you do want to play the key breakdown, I would give yourself 2 to 3 weeks, and I wouldn't go too far out of the money. The price target on SPY is $455. Now, in terms of scalping opportunities, you can look for, the morning spike towards pre-market highs. So look for where the pre-market highs are, and then look for the morning spike towards 9:35 a.m. towards the pre-market highs. SPY is having this consistent pattern where it tops out very, very early towards market open when it retests the pre-market highs. So you can look to grab puts around that level towards the key breakdown level, and just understand it is going to sell off hard. If you see this 467.69 react as a resistance level, you're going to want to look to grab the puts. If it's breaking out and turning into support, I would suggest waiting towards 474. Either way, within 2 to 3 weeks, this is heading towards 455. So there's scalping opportunities and there's swing trading opportunities. Now, let's get into a new play. This is a potential household play as well, a legacy type of play. These are very, very rare setups where you can make very lucrative returns with the options that do not come around very, very often, right? So you have to have that ability to recognize what the best setup looks like. This is one of them. Now, out of the 5 I showed you, it is not the best one. It's a decent one, but this is a new one that I came across. This is going to be DoorDash. All-time lows are sitting at 110. This had multiple rallies right here, went from 150 all the way to 250s, and then right here it went to 110 all the way to new all-time highs at 257. We are starting to approach that all-time low. So with that being said, here's what I want you to look for in terms of Dash. So in terms of my point of view, right? The stocks that follow the SPY, they're going to continue to go down. I don't think these stocks have bottomed out yet from a macro overall point of view. For the short term, they can have some micro bounces and micro spikes, but I believe they're going to be fake outs, right? So in terms of Dash, there is a put option opportunity if you can get in around 145 for the gap close reversal. I wouldn't play it lower than that. So from my point of view, this is something more of, if you can't get in towards there, then you kind of just want to wait for the buying opportunity. So the buying opportunity on this is set your price alert at or below 115.50. There's a gap to fill right there. Once it's trading around this level, I don't think there's going to be too much more downside potential. I think we're looking at a setup where this fills the gap, and then we look for the consolidation, phase 2 of the reversal, and then phase 3, once it's starting to bounce off a consolidation, then we look to buy the call options and swing trade this out. So that's like a midterm swing trade, and it has huge upside potential, and there's many gaps to fill above. There's a gap to fill above at 145. There's a gap to fill above at 202. So that's what I like, charts that can spike big in a short period of time, and I like to buy them towards their key oversold key support levels when they start to fill their gaps. So keep that on your radar for that price alert. It will trigger within time, especially when SPY hits 455. That's when all these stocks are going to get slaughtered. With that being said, NVAX, and then that's where it sets up for the potential trend reversal. Like I said, for SPY, the call options are at 455. When it consolidates at 455 and it starts to bounce, then you buy the call options, swing trade this back up to like 465, 470. That's the play on SPY. So I'm showing you how to trade these both ways at the best prices, right? In terms of puts, we're in the middle right now. So they're not the best prices. So keep that in mind. You're trading towards key breakdown levels, not 100% of the best prices. We already nailed them at resistance. We're in the middle now, right? So NVAX, this is expected to be another home run play. So for this one, there's two key critical levels. There is the 102 gap fill level, which is sitting, where is it? Let me go a little bit. Okay, so right here, there's a gap to fill right here at 102. Set your price alert for at or below 102.60. That's where the gap fills. If you see it consolidate, if you see it bounce off that level, you're going to want to swing trade some call options. So in the meantime, I'm on the sidelines. With that being said, if it doesn't go to 102.60, and it starts to turn 135 into support, and we start to see a bounce off of 135, it looks bullish, it's consolidating, it's starting to have a trend reversal, then I'll be interested in buying at 135. As of now, I'm on the sidelines for this. You just have to keep in mind stocks are most likely going to continue to go down a little bit more for the macro point of view, so it's really not that time to buy the dip for the stocks that are following along with SPY. As for AMC, this is what I want you to understand about AMC. So in terms of AMC, your key support right here is at 25.50. Here's what I want you to understand about this. AMC, for the short term being, is extremely bearish. Let me walk you through this play. There was a gap to fill right here on AMC towards 25.43. It blasts off. As soon as it fills the gap, it has a reversal, and then stocks sell off hard. Like I told you guys in my previous video, this was going to be a classic sell the news play. I didn't get puts on it simply because it didn't spike high enough for my entry, but it had a phenomenal gap close reversal. So with that being said, this is what I want you to understand about the short-term price action. Your key support right here, which is also at your key gap fill level, is now reacting as a resistance level. And on Thursday, it almost cracked this major support level at 2080. So what I want you to understand in terms of key breakdown plays and in terms of huge sell-offs where puts can print for the short term being, like in terms of situations where you remember that Rivian play I gave you guys, in terms of as soon as it cracked new all-time lows, the puts printed, they went up over 20x nearly. There's a play on AMC in terms of its key breakdown. There's going to be a hard sell-off once this cracks 2080. Once this stock can crack 2080 and turn it into a resistance level, that's when you're going to see a hard sell-off into a key breakdown. And then you could play puts for the short term. But in terms of the real play and the lucrative trading opportunity where I'm hitting this heavy is the call options. Wait until right here. There's a gap to fill on AMC at 1641. Once 2080 turns into a resistance level, that's where it's going to be heading within some time. So once you see this stock fill this gap, it should really start to have a reversal and skyrocket back to at least $21 for the short term being, and then even more upside potential with 25. So it's setting up for a phenomenal swing trading opportunity. So I walked you through the put option play. You can also consider if you like getting in before the key breakdown, because you see how it's turning this key support into resistance. So it's that kind of it's a similar pattern to SPY in a sense. Similar pattern to SPY. When SPY goes to 455, AMC basically goes to 1640, right? And then we play in terms of going long for the gap close reversals. So right now we're in key breakdown stages. That's what I want you to understand. For the short term, they could have some micro bounces, but I believe they're going to be fake outs. And in terms of like swing trading, the money's going to be in the puts. And then when they fill their gaps at their key oversold levels, then the money's going to be in the calls, right? So I'm showing you how to trade both ways. With that being said, AMC is a very, very strong stock. Whenever it fills a gap right here, there was a gap to fill, huge upside potential, right? At 32, it fills the gap. It bottoms exactly at it, has a reversal, shoots up to $50 almost. There was a gap to fill right here at 26. As soon as it fills that gap right here at 26, it shoots up to 34. And the next level where you want to hit this one hard, I'm telling you, is at 1641. In terms of buying, wait till 1641. That's where I'm hitting this hard with call options. Ride those up. That could be a 10x play. And that's a household name play. That's like my brand, my name, everything's on that play. Like, that's the play. In terms of a play where it's basically a guarantee, you know, nothing's a guarantee, but in terms of like a guarantee type of play where you just, it's like the absolute best setup, is Tesla. Tesla, I'm waiting in terms of call options, like I said, 938.53. That's when I'm swing trading, buying the call options. Now remember, I have to use confirmations as well. It's not just prices. Previous all-time highs right here towards 900, massive sell-off. Then it has the new all-time high breakout, massive breakout. Then it comes back down to fill this gap at previous all-time highs. And as soon as it fills that gap, it blasts off. And then it fills this gap. And then it has a reversal. Then it goes back down to fill this gap. So in terms of Tesla, this is what you need to understand in terms of key breakdowns. If you see this 1058 level, this key support level, react as a resistance level, we are heading back down within like 1 to 2 weeks to fill this gap at 938. And then towards that 930 zone, that's where you want to start buying the call options. In terms of key breakdown, 1056 is that key breakdown resistance level. You see a pop towards that 1056 level. It's reacting as resistance. Ride the puts back down, swing trade them for the gap to fill at 938. That's the key breakdown on Tesla. And then the call play is towards 938. Amazon. This is another one. You just cannot go wrong with Amazon. Every single time Amazon stock fills this gap towards this $3,200 level, check this out. There's a gap to fill right here. It explodes up, goes back down, fills the gap. As soon as it fills the gap, bullish pin, it explodes up to nearly fill this gap right here. Then it goes back down. There's a new gap to fill right here at the same previous level. It bottoms at the exact level, explodes up, fills the gap. You want to use this strategy, works best on strong stocks like Amazon, Tesla that are consistently pushing for new all-time highs. When they go back down to fill these gaps that are waiting to fill below a key support level with huge upside potential, you can ride them back up and then play for the gaps to fill above because these gaps tend to fill, right? There's a gap to fill right here at 33.50. So the play would be on Amazon. I'm not really interested in getting puts on this one or anything like that. There's certain stocks with key breakdowns I won't even consider getting puts on. But in terms of this one, 3189.78. Once it fills this gap towards that key support level gap close reversal channel right here towards this red line, it should start to have a reversal and then within a few days shoot back up to 33.50. Out of money weeklies are going to print like crazy. That's the call option play on Amazon. So those are the household names list. Those are the household names list. Those are the best plays. Now let me walk you through some other plays here. So this one is expected to be a phenomenal one as well. And this one's coming up. So Lucid Stock. I'm telling you, for those of you who stay to the end of these videos, you get rewarded with like some of the highest quality setups because I'm saving some really good ones for the end as well. So let's get into this one. So in terms of Lucid Stock, what I'm seeing is, you know, this recently cracked a key support level at 35. It went all the way down to 33. Now it hit like $43 almost very, very quickly. I think it's an overreaction. What I'm looking for on this one, check this out. See how it sells off, pushes back up to fill this gap. Once it fills the gap, hard sell off. I think the same thing is about to happen. There's a gap to fill on Lucid Stock at 44.72. Once this hits 40.72, you see it react as a resistance level. Swing trade the put options, hold those out for a couple days. It should drop back towards the $38 to $39 range. That is going to be an amazing play I'm interested in looking into. So our next stock, if some miracle can happen and DWAC stock can gap up and spike to 60.27 and starts to react as a resistance level like it did right here. See the same pattern, right? See this green day and then it sells off, push the gap. So this time it didn't fill the gap. If this can go to 60.27, I'm going to look to get puts at a resistance level, ride this back down towards $48 to $45. Within the midterm, this stock is heading to 43.81. Once it hits 43.81, that's when you're going to want to consider to buy the call options, especially if this gap right here hasn't been filled, because then it will start to have a gap close reversal and start to fill this gap towards 60.27. So I'm showing you the key levels to trade these both ways at the best prices. Another stock, Pinterest. So in terms of Pinterest, right now, extremely, short biased on this one. If some miracle can happen, if it can go to 36.52, I think it's going to be a great swing to get puts. In terms of the calls on the long side, I'm waiting towards like $25 to consider buying this, 25 to 24. There's much better plays, but that's just something on my radar. Affirm. In terms of Affirm is still very, very bearish. For this one, in terms of like buying call options and stuff like that, I'm waiting for this gap to fill towards 67.79. That's where it's going to be heading within some time. As of now, it's bearish. So just understand, certain plays are bearish right now, but that doesn't mean I'm going to buy puts on them. You have to figure out which ones are at the key resistance levels, which ones offer the biggest ROI, return on your investment, right? And then those will be the ones I'm playing the puts on, right? So I'm showing you some plays that I'm kind of just waiting on in terms of the call side. In terms of Ford, I think we're setting up for a midterm put option, but the time isn't yet. I'm going to wait this one out a little bit. I'm waiting a little bit for some more resistance to form. I think it's a little bit too early to get in on the Ford puts, in my opinion. DDDS, Dillard's, double DS. In terms of this one, I think we're setting up for an interesting play here. So there's a gap to fill right here at 231.57. If you see this break through this level, it cracks and it reacts as a resistance level, it is going to have a hard sell off to 220s. You're going to want to grab some puts if you see that key breakdown happen. So keep that in mind. If it consolidates, if it starts bouncing, it's going to start to go back up. I'm bearish on it, so just pay attention for the key breakdown on Dillard's. LVV stock, extremely short biased on this one for the time being. I think it's topped out. Check this out. Highest gap to fill above, just like we recently saw happen with Tesla. As soon as it fills the highest gap to fill above at 123.80 right here, it starts to have a reversal, sells off to 115. With that being said, previous support right here is reacting as a resistance level. It's looking very, very bearish from an overall point of view. I think we're heading back down to fill this gap at 107. I would focus in terms of entry towards like 118 to 119 swing trading puts. Give yourself 2 to 3 weeks. Always give yourself a little bit more time than expected when you're swing trading options, right? In terms of day trading, if you want to take the bigger risk, then you can go with the closest to expiration, the weeklies. So with that being said, Nvidia, in terms of Nvidia stock, you have a key gap fill level right here at 266. This actually filled in the pre-market on this day, and it had a major reversal. It shot up all the way to 320. With that being said, it's forming lower highs. It looks bearish, all kind of similar patterns to the stocks I showed you. You want to see how this reacts towards 266. If you see 266 crack and react as a resistance level, it is going to have a hard pullback. And within time, it's going to start to go all the way back down to fill this gap, waiting to fill below at 232. Once this hits this key gap fill level right here at 232, and it starts reacting as a support level, reacting as a resistance level, see how I got these price lows set at the key levels, right? Then you're going to want to consider buying the calls for the swing trade. So I'm showing you both ways, right? So in terms of Alibaba is setting up for a short-term put option swing trade. Here's what I'm seeing on this one. This is what I'm saying. You stay to the end of these videos, you get rewarded, guys. Look at this setup. This is going to be a really good one. There was a gap to fill on Alibaba right here. It was a small one at 131.69. As soon as it filled that gap, it reacted as a resistance level. Now it's starting to sell off. When it forms this candlestick at key resistance levels, it tends to continue to downtrend. What I think we're going to see on Alibaba for the short term is something like this, where it has that nice sideways pullback to come back down to fill this gap at 126.63. If it cracks 126.63 and reacts as a resistance level, which I think it will, it is going to go to 121.16, right? So that's setting up for a potential short-term put option play. BBBY. This is extremely bearish. This is going to fill the gap that's waiting to fill below right here at 13.37. Current price is at 13.80, so it's setting up for a scalp. But guys, we need some sort of spike. If we can get some sort of miracle where this can spike to like ideally 14.43 at this point, 14.40s, buy the puts, ride this back down at 13.37. That's where it's heading early this week. So the target's 13.37. The play is look for puts towards resistance levels, towards the lower 14s on that. MU, this one I am extremely short biased on. Similar setup to Ford, except this one's in play where you can begin to get the put options. I think it's going to be a good idea to get some midterm put options on this one. It's very cheap, and with this play, I would give yourself plenty of time. I would consider potentially a March 18th put option on these. That's what I would consider. With that being said, here's what I'm seeing in terms of MU stock. You have key resistance right here. It is struggling. It's reacting as resistance. It's forming lower highs. It's doing a similar pattern to where it did right here, right in terms of the candlesticks. It's looking extremely bearish, looking extremely short biased. I think we're going to really start to see a pullback towards $93 to $92 over time, most likely by March. This will hit $82, right? So that's what I'm looking for in terms of MU stock. I think we're really going to start to see that sell-off occur within the next couple of weeks, potentially something like this. So that's my thoughts on MU. Extremely short biased on that one. I think that's going to be a great leap option play. So I would look into that. IBM. I think IBM is extremely bearish. I think we're setting up for a potential play within a couple weeks. It goes to 127. Right now, I'm on the sidelines. If this 136 continues to react as a resistance, it's really going to start to sell off. I'm short biased on this one. I think it's setting up for another midterm put option play, but in terms of midterm put option plays, MU is one of the best ones I'm seeing at the moment. Dollar Tree. So in terms of Dollar Tree stock, this one's a little sideways. You can see there was a gap to fill right here. It filled the gap, had a short-term reversal. The highest gap waiting to fill above, the best level to buy the puts is at 146.61. That's what I'm personally waiting for Dollar Tree. If it reacts as a resistance, I'm going to buy the puts, ride this back down to the 130s. That's my thoughts on that one. Other than that, really not interested in doing anything with this one for the time being. Nike is approaching a key level. There's a key gap fill level at 157. If it cracks through 157 and reacts as a resistance level, hard sell-off to 151. Puts will print. So just study how it reacts. If it starts reacting as support and it looks bullish, then it is going to start to climb back up towards 160. So in terms of my point of view, I'm thinking we're going to 150, guys. I think we're going to see a hard sell-off. So key breakdown play, look for Nike to crack 157. Once that happens, buy the put options, ride this down to 150. That's where it's going to start to bounce around 150 to 148. Costco is looking a little interesting. So in terms of Costco, we kind of have a triple top. Resistance here, resistance here, resistance here. This is a very bearish trend reversal candlestick. When you see those dojis, this gravestone doji form at resistance, that's very, very bearish. I would be extremely cautious and careful in terms of buying Costco just with this pattern here. I understand it's consistently pushing for new all-time highs in that sense, but I'd be very, very careful with this one. With that being said, once we crack 536, you can play the key breakdown. We're gonna go straight down to fill this gap at 124.23. So there's a lot of key breakdown plays coming up. So figure out which ones you want to trade in terms of the momentum, in terms of the option chains, in terms of the stocks you like to trade. We're looking at about a 13-point drop on that play. Once this fills the gap, it could have a short-term bounce, a short-term reversal. I'm bearish on Costco for the moment. I think we're going to go back down to 524.33. Pay attention for the key breakdown. You can see the wicks right here. Well, once that stock cracks those wicks, hard sell off to 524. So SAVA, a lot of you guys are asking me about SAVA stock. It does have nice upside potential for the long term where it can potentially fill those gaps, right? In terms of the chart though, still bearish on SAVA. For this one, I would wait for 36.77. Wait for this gap to fill 36.77. Buy the calls when you see the consolidation, the bounce, the confirmation, ride it back up to at least $45 a share. So that's what I'm waiting for on SAVA. Going to set my price alert on that. So remember, your trades must come from price alerts. You're going to create your trading plan. And then, once you have those key levels on your trading plan, set those price alerts. Once you get the price alerts, wait for confirmation. Once you get the confirmation, seize the moment, execute the trade, stick to your plan. You get stopped out, and then sell towards your price target, lock in profits. So next step, Lgbn. In terms of Lgbn, really liking this play right here. So this is what I'm seeing, and it's going to take some time for this to occur, but here's what I'm hoping for. I'm hoping that this gap doesn't fill. There's a gap to fill at 1186. This is what I want to see happen. Now, it's going to have some short-term little pops as it's downtrending, but this is what I want to see for this one is. This stock loves to spike, and it loves to have gap close reversals. Every single time the stock fills a gap, it literally has a gap close reversal. It works phenomenal with the strategy. So there's a gap to fill at 687. Once this goes down to 687, within time it will get there, we should see a strong reversal. And it's going to be a phenomenal play if this gap hasn't filled, because then we're using two strategies. We're playing the gap close reversal, and then we're playing for the gap to fill above. So remember, add things onto your strategies. One thing I add on is gaps to fill. If there's a gap to fill within the side of the reversal, that makes the strategy way better. That would be called a gap close reversal to fill the gap. Next play, BYND. We can potentially see a reversal on BYND. In terms of BYND, it is trying its best to have a squeeze. It is trying its best to have a reversal. This would be a midterm play. It's just something I'm keeping an eye on. You could see it's got a very strong foundational support level towards this key level, but we do have to be extremely careful in current market conditions. But we are potentially seeing a confirmation of a reversal. If this can continue to hold and stay above 68.33, we're going to be on track for a breakout above 73 and then a nice spike to $80. So this is just something I'm keeping on the back burner for now. Google, in terms of Google, you're going to want to consider buying this towards these key levels. So one thing that you want to look for in terms of Google is there's a gap to fill right here towards key support, towards $2,673. You see it reacting as a support level down there. You're going to want to consider buying and swing trading some calls for a nice pump to 2,800. Now, if it's not reacting as support, or if you get stopped out, the next level you want to focus on, and this would be your best level, is going to be right here, 2,568. That's a key level towards previous all-time highs where the stock blasted off. This is going to be your best level to buy Google, towards 2,568. Now, that is going to be all the plays, guys. So in terms of top ones to watch for the short term, you have the key breakdown on the SPY. You have the key breakdown on AMC. I like the key breakdown on SPY better because it's key resistance. You know, this is previous all-time highs. That's a major resistance level. AMC is a key breakdown towards oversold levels, right? So you got to be able to figure out the difference. Is it a key breakdown towards major resistance, or is it a key breakdown towards key support, right? I prefer the ones towards the major resistance levels, but you can also trade the other ones too. We saw the hard sell-off where the puts printed on Rivian, so you could play both, experiment with them, right? But I prefer at best resistance. That's where I'm hitting these with size. With that being said, the short-term plays that are coming up. So like I told you, you know, you can look for key breakdown plays, or if they have a small spike, play the fake out plays. Put options on Tesla, ride this back down to fill the gap below at 938. You can consider potentially put options on AMC, ride this back down within time towards 16s. You can consider in terms of other plays, let's see the SPY, put options, like I said, towards the 467 if it reacts as a resistance level. And you can also look into DWAC, puts towards 60.27. You can also consider BBBY. If we get that spike to 14s, puts ride it back down to 13.37. Lucid, puts towards, you know, right here, $44.72, right? So those are going to be the short-term ones that are coming up. We also had Alibaba, right? We went over Alibaba, the puts towards the key breakdown towards like 129.50. Nike, so many plays, so many upcoming potential plays. These are expected to be the best ones, especially on the call side. Problem with the put side is it's like you're in the middle. It's okay to be in the middle towards like key resistance. You got to be careful though towards key breakdowns, because they can have those nice short-term pops, but overall most likely fake out from a macro point of view. So that is going to be it, guys. Thank you so much for staying to the end of this video. With that being said, if you are within Trader Society, I will see you tomorrow live at Market Open, where you'll be able to trade live with me, ask me questions live on the spot, where I'll do a stock analysis on any stock that you'd like me to review, whether that's for the short term, midterm, or long term. And then you'll also be able to direct message me. It's the only way to message me on a one-on-one basis in the Discord chat. And then once the webinar is over, I'll be, taking questions within the chat, giving you my analysis within the chat, sharing with you my real-time trade alerts in terms of when I buy the calls, when I buy the puts, right? There's also share plays where I buy stocks, not just options. But yeah, if you are interested in being a part of Trader Society, the link is down below in the description. Make sure you read all of the information on the page. And if you feel like it's going to be a good fit for you, then I would really encourage you to take action and join this program, because I'm telling you guys, these expected plays are going to be like home runs. These upcoming plays, like with the Tesla calls at 9:38, the AMC calls at 16:41, you know, the Amazon calls at 3,189. These are expected to be like home run potential plays. I'm talking like household name plays, like legacy type of plays. And they're the best setups at the best prices. If it doesn't work, it doesn't work. Like, I'm honored to take these plays because you can't get better plays than these. If you study the history of those price levels, they only come around a couple times a year at the most. So yeah, that's what we're doing. We're trying the best setups at the best prices using these unique gap strategies. So in terms of Trader Society, you get access to, like I said, the live trading webinars at Market Open every single day, the chat room, one-on-one direct messaging with me within the chat room, and then you also get access to the entire video lesson library where you get to learn price action, you get to learn all of the unique technical strategies, you get all of the indicators, all the platforms, all the chart studies, everything it is that I use in terms of that sense. And then you also get access to the real-time trade alerts. And there's so much more to it, guys. If you're looking to invest into your education, I'd really encourage you to just check it out. The link is down below in the description. And I will see you guys into tomorrow at Market Open. Thank you guys so much for sticking to the end, and I'll see you guys till then.